Okay, so we're going to move on to EI work sharing program enhancements with respect to COVID. So EI work sharing has been around for a number of years, and they've just provided some additional program enhancements to make it easier for employers to employers and employees actually to take advantage of this program while COVID is happening. So we'll go over what it is, how it works, and how to apply. So basically what it is for employers that are experiencing temporary reductions in their demand, you can set up this agreement that will allow the employees to reduce their hours and the employer to pay them for those reduced hours. And then the employees go through the EI program to top up the portion that of the reduced hours that they have. So EI would provide them 55% of their pay for those reduced hours, so for the period of the reduction. During the COVID period, one of the enhancements is that the employer is required to demonstrate only a 10% decrease in sales. So if you don't fit into that other program that Jesse talked about, the 75% wage subsidy, you don't have a 15% drop in sales in March or 30% in April or May, potentially you could fit into this program with just a 10% drop in sales. And it wouldn't apply to seasonal shortages of work and things like that. So for some of those people that had questions about seasonal businesses, may not work in those cases. How does it work? So we kind of talked about that. You get EI top up the employees, and the employer really just gets to reduce what they're paying to the employee based on the reduced hours of work. You create a work sharing unit, so all employees in a work sharing unit would agree to reduce their hours of work by the same percentage. And that can be anywhere from 10 to 60% on average over the course of the agreement. So it doesn't have to be exact week to week, but over the course you have to sort of pick that percentage that you're dropping down to. One thing to note is that owner managers are not eligible for this program, whereas they are eligible for the other programs that Jesse was speaking about with respect to the 75% wage subsidy and the 10%. So the program enhancements specifically related to COVID are that they're trying to make it easier for employers to apply. So they're extending the duration of the agreement. It used to be 38 weeks all the way to 76 weeks. So that takes us hopefully through this period. They're waiving the mandatory waiting period between agreements. So if you previously were on this program and there's normally a waiting period, that is gone. And they're easing the recovery requirements plan during this period. So I guess consider this program. Our tip would be if you don't meet the eligibility for the other 75% wage subsidy program, because this has a lesser revenue drop test. How to apply. So there is an application form. This program has a bit of a reputation of being a bit difficult in terms of the requirements to apply, but they've tried to make that a little bit easier. So there is an application for the agreement. The employees have to sign an agreement. So it's an agreed shared agreement between employer and employee. And then normally there's a recovery plan required, but they're limiting that to a single line of text in the application form. So they're making that really easy. You don't have to come up with a complicated recovery plan. And those agreements are monitored by Service Canada. Normally this all takes 30 days to get that application process in advance of when you want to start, but they've dropped that to 10 days to make it easier during this COVID period. So we're going to stop there and just cover off any questions with respect to EI Workshare. I can't hear the audio, so I'm going to try and just follow along with questions in the chat.
Yeah.
So just bear with me here. Okay, so David is asking, will the enhanced Workshare program be available after June 6th for businesses coming back online in a less active manner? So I guess you're referring to if you, I'm just clarifying, David, if you're shutting down because of COVID, but then you're coming back online. I think as long as you can demonstrate that you're 10% down from your normal activity, then you would be able to fit into this program. Doug is asking, is it retroactive back to March 15th? No. So the way this program works is you have to apply and you have to be accepted into the program. That's that 10-day waiting period. And then it would start being applicable after you've been approved for the program. Another question, so employees and employer in the same group unit have to make an agreement on reduced hours. So yes, there has to be an agreement amongst a work sharing group to be agreeing on that reduced set of hours, and they have to sign off on that. Another question from Paul, can we utilize Qs and then still qualify for the work share program if the work is still reduced levels in June? So yes, Jesse talked about that briefly in his part of the presentation. There is an interaction rule that just came out yesterday with respect to EI workshare and Qs. So they're saying that yes, you can have both programs, but your 75% wage subsidy will be reduced by what the employee is receiving in EI on the workshare program. So you'll get a reduced benefit from that, but you'll still be able to be in both if you wanted to be in both, if that answers your question. Okay, so what if you're laid off and now on EI, but starting a new business in the same industry, and that industry is experiencing reduced work due to COVID? Trade is construction, residential. That's a good question. I'm wondering maybe.
I think the problem with that is you'd have to have the 10% drop.
So it's hard to tell from the question whether you're an employer or an employee in that particular situation. If you're an employee, we'll talk about CERB and some of the limitations there on whether you can continue to work. If you're an employer, you would be eligible if you meet the other eligibility criteria. Can you do work share and 10% programs? So they didn't talk about that interaction, but I would assume it would work the same way as what they've said about the 75% Qs, which is you can't double up on any program. So you would have to reduce what you're claiming. So what the employer is claiming would have to be reduced by what the employee has received in EI on this program. Former employee, and yes, there would be no 10% to compare to though. So this is, so this is a brand new business. I'm not sure that would work with the EI work share because you do have to demonstrate that you're down 10%. So that might not be the best program for that particular situation. And that's all the questions I'm seeing. I'm not hearing from Kyle, so I'm going to assume that that's all the questions.
Yeah, you cannot hear me still right now? No? Okay. So yeah, we will move on to the next section.
All right, so I'm going to assume we're okay to move on to the CERB benefit. Great, I'm getting the thumbs up, so that's what we'll do. Okay, so the CERB benefit is the Canada Emergency Response Benefit. That's the one probably everybody's been hearing lots and lots about because the application was out this week. So people are applying to this, and actually we're hearing that they are getting money. So money is actually flowing on this one, so that's exciting. It's $2,000 a month in benefit for people that are eligible, and we'll talk about that criteria. So it's basically for people who have stopped working due to COVID, people who are sick or quarantined, taking care of someone else who's sick, parents who have to stay home with children due to school or daycare closures, or if you have employment but you're not being paid because your employer maybe has had to close their doors, so they haven't laid you off per se, or they have laid you off. It's either or, really. It's a large program trying to encompass as many people who are out of work as possible. And also, which is a great benefit, is people who are not eligible for EI. So those that are self-employed, contract workers, owners, they are eligible for this program, although they aren't normally eligible for EI. And what they are saying, the change here from yesterday, or actually from earlier this week, was originally they were saying you couldn't have any other income when you're on this program. And now they're relaxing that a bit and saying that perhaps people can work a few hours a week. And this is really for anybody who, hasn't been completely out of work, but is really down, maybe freelance contract people who are trying to take on a little bit of work, but there just isn't a lot of work out there. And so we're hoping that they're going to move forward with changing the legislation to relax the rules around allowing a little bit of work to happen and still be eligible for the benefit. who can apply. So as long as you're 15 years old and live in Canada and you've had income of at least 5,000 in 2019 or the 12 months prior to your application. That particular rule has become a bit of a sticking point for some self-employed people or some business owners who have not taken any remuneration from if they're incorporated a corporation in the form of salary or dividends. And so they're looking at that, and there's certainly some talk around that. So I would say if you fit into that category, because I've had that question a lot this week from clients, then please reach out to your MP, your local MP, and let them know that this is an issue for you. Because the government at the moment, the rule is you have to have at least 5,000. And if you don't fit into that criteria, then it's not going to work. But if you have a particular situation, you should be pushing your MP on this. You're expected to be without employment for at least 14 consecutive days. So that refers to what Jesse was talking about earlier under the CEWS program. People on this program, you have to be expecting to be off for those 14 days. And then you would get the benefit under this program. And if your employer decided to hire you back, you could go back then after you're outside of that period. Okay, so just a note that if you've already applied for EI after March 18th, you don't have to reapply. They're going to move everybody related to COVID who applied for EI over to CERB. That's how it's going to work. So that would not apply to people that are on EI, for example, that are on mat leave. It's only those that have lost their work due to COVID, and everybody's going to be on the CERB program. And then if you're still out of work after the COVID issue or the COVID period, then they'll move you back to the EI program after that, if you're still eligible. Okay, so the benefit is $2,000 a month. We talked about that. It is taxable. So that's really important for people to realize because they're actually not taking any deductions at source. So everybody this week who's been applying has been getting a $2,000 benefit into their bank account, and you have to realize that you're going to have to pay tax on that next April when you file your taxes. So just keep that in mind. Like I say, funds have started flowing. We've heard lots of reports of people getting 2 payments, and that's because the period started in mid-March, and so they're paying you for the back pay for March plus April, and so there won't be any more payments now until mid-May. So if you got your $4,000, then you'll have to budget that until mid-May. The program runs till October 3rd, and you have to continue to confirm every 4-week period that you're unemployed. So just going on here. And we've already talked about kind of the EI rule there. So we'll just skip on to the next slide. So how to apply, probably everybody's heard this and seen it lots, but this is the slide if you need to apply. They are doing it based on birth month this week because they didn't want such a high volume to crash the system. We're hearing that, the applications are going in smoothly and people are getting their money within a couple of days. So don't worry about if you're kind of a later birth date, that you'll still get on there. And okay, so we're just going to look at we're going to stop and look at a little scenario before we deal with some questions. So this kind of covers off a few things we've talked about so far. So if you look at a person who's maybe making $48,000 a year, an employee, their monthly salary normally pre-crisis would be $4,000 a month. So they would be taking that home net of tax, of course. If they're laid off due to COVID, they can qualify for the CERB and they get $2,000 a month. So that's about half of what they were normally making, but no deductions. So you have to keep that in mind. And then if you compare that with what they would have gotten on EI, if they were laid off regularly on EI, they'd get about $2,200 a month, which is 55% of their normal salary. And there is a cap there, but the $48,000 person is under the cap. With respect to the program that Jesse talked about earlier, the 75% wage subsidy, the employee would remain on payroll. The employer would qualify for this, assuming they qualify for CEWS, and assuming that they can't top up the other 25% due to financial hardship, closure, maybe the employee's not even working at the moment, but they want to be able to keep that employee on their list of employees and be able to ramp back up when COVID is over. that employee would be paid $3,000 a month under that program so that would be 75% of their normal salary, and the employer would be fully reimbursed in that situation. So I call that the win-win scenario. So that's probably the one that would be best for employers that are looking at perhaps bringing some employees back. Everybody wins on that one, and I think that's really how the government's designed it, is they do want employers to try and bring back employees if at all possible. So we're going to stop there and answer questions on CERB. So again, I can't hear, so I'm going to scroll back through the chat and try and answer as many questions as I can. Okay, so let's see here. And if Jesse, if you want to jump in, feel free to. Okay, so employers have to lay off employees for them to be eligible for CERB. So technically, no. The way they've written the rule is, you could be just at home because you're sick, but your employer hasn't even laid you off, or you have to take care of children, same situation. Maybe you're out of vacation and other benefits, and so you can apply for CERB and you don't have to be laid off. If you're an employer listening, I would probably recommend, if you're going to if you really have a shortage of work and you want to put your employees on this CERB program, then you probably should lay them off and issue a proper ROE for shortage of work due to COVID, just to keep everything kind of legal and above board. But no, the employee does not have to be laid off to be able to apply to that. Can university students home for the year apply for CERB? If they meet that $5,000 test, so they've had more than $5,000 of income in 2019 or in the past 12 months, then yes, they can. So that's good news for youth, and that was part of what the government wanted to do. Next question is, can staff laid off in January for shortage of work, construction, residential, but would be working now for COVID-19 be switched to CERB? Laid off in January, but would be working now, but for COVID, I see what you're saying. So again, they have to just meet that $5,000 test. So yes, if they, in the past year, like going back to 2019, if they earned $5,000, then yes, they could apply for CERB if they cannot get work in that industry due to COVID.
I think the concern there.
Okay. Oh, I see Jesse's answering some of these, I think, as we go. Sorry. Sorry if I'm duplicating. Okay. So employers looking to add the wage subsidy, is it in the best interest of the employee to wait to bring them back once their current CERB period has ended? Yes, I would get in touch with employees that you want to bring back and figure out what they've been paid for in terms of the CERB periods, and try and work that out if you bring them back. The government, I think, it really wants employees to be put back on payroll. That's why they brought out that generous CEWS benefit. So I'm sure if employer and employee both agreed and wanted to be back on CEWS, then you could work that through with the government in terms of when you can come back. If you're on maternity leave for the last year and supposed to return to work, but employer can't take you back, can you get CERB if your $5,000 came from EI? That's a really good question. I don't have the answer to that. That would be, we'll have to work that, and we'll have to get back to you on that one after the presentation. Unless, Jesse, you have an answer to that. Oh, he's nodding. Yeah, I can't hear.
If on CERB's website, they have a bunch of frequently asked questions, and one of them is,
how do we confirm every 4 weeks we continue to be unemployed? There's going to be, I assume they'll reach out to you through electronic means for you to go on and confirm that, or they're going to ask you to go on and confirm, similar to how you had to go on at the beginning and apply. So you would go on through your My Account or however you applied. One clarification on work sharing, EI will top up 55% of employees on reduced hours. Does maximum weekly limit applies to full week, or how does that work? So I assume you were asking about the maximum weekly limit under EI. It would be based on the reduced hours. So let's say they are at 50% of their normal pay. It would be 55% of that, whatever they're being paid there, that 50% that they're being paid. Hope that answers your question. If work is not available as a result of reasons related to COVID upon conclusion of your maternity, okay, that's the answer from Jesse, so I'll leave that. How does employer get the 75% back? So there's going to be an application available in 3 to 6 weeks, and it'll be a refund that comes through, and that's why Jesse was recommending to get set up for direct deposit for your business, because they're going to either mail a check or direct deposit you the money, and of course direct deposit would be faster. Okay, so there's a very long question here. I'm just scrolling here. There's so many areas and questions and misunderstanding. Our company construction shut down in April has been able to keep 35% of employees, 6 of 17. Majority were done the 3rd or 4th, but some were done end of March. I know I can't hold my workers' hands, but I am concerned as I believe some applied for EI and some applied for CERB. My thought is that the 4-week period was a per person layoff period, and then assumed to be off 14 days wording. If there are errors in these, they would pay back the full amount of the weeks not qualified. I have completed ROE for all. Also, if we have job site deemed essential the next days and call my people back and they did not know this, how do the subsidy receivers cancel or notify? What if we bring them back and they receive money? So that's a good question. Yeah, I think that has to be dealt with. There can't be a doubling up of benefits, so there would have to be a repayment there, likely by the employee, I would guess. We'll have to get back to you on that. Okay, so as a self-employed person, can you apply for CERB even if your work goes up and down, for example, on and off 14 days for quarantine, but then if you go back and then we'll be off again, so there is an on and off component. I think as long as you're off for those 14 consecutive days, then you can apply at those times when you're going to be off due to COVID for the 14 consecutive days. I'm going to stop there because we are at the hour, so I'm going to continue. I want to move on to the next section because I think it's pretty important.